Okay, welcome to this live intraday strategy webinar on SB Trade Desk, guys. Today is Thursday, November 10th. Great to be with you guys here this morning. Adam, D, Michael, Mark, Horace, Steve, Pooja, Pete, Trevor. Great to see everyone in the room. So, thanks, for that, Pooja. I was having a little issue earlier with the AV, so thanks for that. All right, Eileen, great to see you in the room as always. So, we're wrapping up the week. Dollar is on another ripperoo. There's some interesting price action going on. I don't know if you guys have been watching copper. Jamie's been talking about that, continuing to rip to new highs. I do have near-term resistance coming up just higher, so we'll take a look at copper. The commodity block on a whole, aside from copper, Conwell, I know I see you here in the room, is largely in consolidation. Okay, so if we look at gold, if we look at silver, even crude to a degree, kind of in consolidation near the lows on that one, still kind of remains in that range. So we'll take a look at those as well and look at the key levels we need to clear to kind of get those trades going. Adam says, Jamie has a session today, correct? Correct, Adam. As a quick reminder to everyone in the room, midweek strategy webinar today at noon Eastern with Jamie Setley. Yeah, that's on tap. So we'll take a look at the Kiwi. We'll talk about the Euro, which is back at the 2016 Open. Oddly enough, after everything that we've seen, here we are, right unchanged on the year for Euro. It's really funny. We'll talk about Aussie CAD, which probed into the key resistance zone that we talked about yesterday on another approach and overnight. Still looking for possibility of near-term exhaustion, a reversal off that high, so we'll touch on that. Dollar yen breakout, I'm not sure. I haven't really touched it. I know yesterday in the webinar I was talking to you guys about looking for some short entries. Look, as far as markets continue to rage on the risk-on format, that yen weakness is likely to be sort of the play. So I've been very hesitant to do anything on that. We'll take a look at dollar yen and see if that's a concerted breakout or not. We'll touch base on the pound, which is holding its own pretty well. Pound yen, interesting levels there. And I saw a question earlier. D, was that you? Got stopped out of euro dollar shorts and euro pound shorts, and it can't get in again. Euro pound is coming in some near-term support, D. So we'll, yeah, listen, don't shrug it off. It's nothing. It's a difficult trading environment right now for near-term positioning, as I noted all week long, guys. So, keep your leverage still a little light. We will get back into the meat and the heavier trades and the awesome setups as we clear out some of this, blowout range. When we get these huge blowout ranges, like I said yesterday, on intraday it becomes very difficult because you don't have those swings in near-term price action to help validate our analysis. So, keep yourself poised. We will, I'm sure, be getting a lot more technical clarity as we get through the week. But euro dollar and euro pound, I'll take a look at both of those for you, D, no worries. Looks to me like the dollar yen is seeing exhaustion and divergence right now, says Steve. So we'll take a look up on that one really early in the session, Steve. Let me just jump into the dollar index real quick. Here's what it looks like as we head into the U.S. Open. Okay, the dollar is stronger again against all of its major counterparts, save the pound, which has a slight advance here of 0.2%. Aussie down 0.1, Euro down 0.1. Biggest loser on the session, Kiwi dollar down 0.99%. Obviously, the RBNZ, as I noted yesterday, did cut interest rates by 25 basis points as expected. The interesting caveat, guys, is that my interpretation of the accompanying statement was rather dovish. Basically leaving room open for further cuts. There's external factors, yada, yada, right? Then you had Wheeler come on a little bit later in the night and essentially say, at this point, quote unquote, I don't think there's additional needs for rate cuts at this stage. So it kind of curbed the expectation. And in fact, if you take a look at the overnight index swaps, which is a gauge of what the markets are factoring in as far as interest rate expectations moving forward, for New Zealand, this has dropped dramatically. In fact, yesterday when I was writing the report on the Kiwi, I noted that interest rate swaps were factoring in a late 2017 hike, or cut rather, excuse me. That even got phased out even further. Okay, so you're seeing no expectations for either a cut or a hike heading into essentially 2018 now. Again, these expectations will change rather dramatically throughout the course of the month and the week, so I don't want to stress it, but what's important to note is that you've seen the Kiwi continue to come off despite expectations for further easing starting to subside from New Zealand. So it's an interesting caveat here, sort of sell the news type of play. the initial spike actually rallied higher on the interest rate cut. So it's interesting that that rallied right into resistance and held as we had expected. And the drawdown now in Kiwi coming in some interesting levels. I'm starting to look for some exhaustion, possibility for a little bit more of a near-term recovery in New Zealand dollar. So we'll go over that. I guess we should start off with that right now. Here's what we looked like last night. And here's what New Zealand dollar looks like right now. If I can find it. It's right here. So on the daily chart, the major area that we turned from earlier in the week and what we highlighted last week was this key zone into 73.80. Okay, we talked about this yesterday. I don't want to beat up a dead horse. You had a lot up there, including near-term slope and near-term median line off the lows, the 786 retracement. Even on a longer term, you had a 764 retracement off that decline from the highs that you made in April of 2015. Channel resistance. Once we broke back below 73.40, it really opened up the floodgates. So here you're coming back into the 100-day moving average. Just below that, slope support off the lows from last month. And at that same region, okay, you also have a basic 618 retracement of this advance. And that's more easily, readily identifiable here on the intraday chart. Okay, right here at 71.75. If we get a drop into this region, I really would be interested in looking for some more near-term exhaustion, possibility of a more stern recovery. Keep in mind, right below that at 71.50, you have the monthly open, okay, and former slope resistance. Former slope resistance, now support. So a nice pocket of support here I'd be looking for if we do travel lower into the U.S. trade session, possible exhaustion. Possible areas to get long on the Kiwi dollar, looking for a recovery back up towards, if we get down here, the first initial targets would be back up towards 72.20 and then 72.60 again. Now, once we do bottom, take a quick retracement, okay, just to give yourself a little bit clear of near-term targets. But if we do, and I was just kind of messing around with this earlier today, if we do that, even if you take it down to that low, the 50%, excuse me, this is very loose analysis, guys, just to give you an idea. But the 38.2 and the 50 come in at both regions we're looking at anyway. So if a low is made somewhere in this region, keep those topside targets in view at 72.60, 72.50, and again, back up here into the 73 handle. All right, Mike, are you seeing a head and shoulders on the daily? Says Michael Schneider. Possibly. Here's the biggest issue I have with that. And again, let me take a step back, Mike. When we're looking at head and shoulders, guys, and this is a very, very common mistake, nothing matters until we have a concerted neckline break. Every time market approaches resistance, I could foresee myself saying, oh my God, this is head and shoulders, right? So we don't want to fall into that trap, Mike. It's a very, very, very common trap. If the neckline breaks, and this is what I would interpret as the neckline right here, if that breaks, yeah, now the head and shoulders formation gives you a measured objective move and a target. That's where the head and shoulders formation becomes beneficial and becomes active, something I can actually work with. But until that happens, Mike, we're just testing, resistance levels here. It would be a break below this that would give me a measured, concerted target. That's why head and shoulders helps. But until we break down here, it's nothing. So, we're a bit ways off before we even start to talk about that possibility. If it does break, I'm with you. Yeah, I mean, a measured move, just to sort of tickle our fancy here. Oops. Okay, so if we just take a measured move here, Mike, that would give us a target down near 66 on a head and shoulders formation break, but that would require a break below this median line or this basic trend line. So it gives you an idea of how we want to use that head and shoulders. Now, to take what you're saying and to put it into context on near-term trading, we can actually do that on near-term trades, sure. On the intraday, if I were to see a head and shoulders formation break, yeah, that would give me a measured move on a much nearer time frame I could work with. But for the daily chart that you're talking about, you'd need to see a break below that key region down near 70.60. Mike, does that make sense? He says, got it. always had clouded ideas about how to use it. Yeah, Mike, no worries. I mean, you're in the right place, man. But that's a trap that a lot of traders fall into. Right now, we're just coming off resistance. If we break the neckline, now we got a target. Where is the resistance on Kiwi again? Steve, so near-term resistance right now, I still have right back on the support level that we broke yesterday. So if you remember in the report, 7260 was the level that we were saying is the focus. It's the key focus level basically heading into today. Once we saw that break, targets at 7220, 7218, and subsequent targets at 7175. And here again, both levels of interest for possible near-term exhaustion and long entries. All right, so resistance is right back up here immediately right now. Support in an area of possible long entry down into that 7175, 7160 region. Stephen, does that make sense? AJ says, hi, I'm brand new in here. What charting software are you using? Thanks. Well, AJ, first of all, welcome aboard. Great to see you in the room, my man. I am using TradingView. This is a free online trading or online charting software, cloud-based. I got highly recommended from my end. I've used a lot of trading software over the years, and as far as being light on your system and having all the technical indicators and sort of tools that we use, I think this is a great package. So tradingview.com, AJ. And again, welcome aboard. Adam also says, welcome, AJ. Cheers, Adam. Appreciate that. You're welcome, AJ. Again, good to see you in the room. Michael, kindly give your technical levels for Euro Yen along with crude and silver. Conwell, I will do that. Let me add Euro Yen to the list here. Euro Yen. All right, guys. Can I get a sound check real quick? Sorry about that. Sound is back. All right, thanks about that, Mike. I apologize about that, guys. Had a little issue with the hardware here. Okay, so it looks like we're back. Thanks. So where was I? I think I might have been talking for a minute. For euro dollar, the 111.70 level, as I noted earlier in the week, remember that was a huge region for us. But as we always want to stress during these times of real surges in market volatility, the closes are absolutely paramount. So while we did fly through it and we maxed out way up here into 113 essentially, the pullback and close lower on the session really was all the indication that you needed. You have the 200-day moving average up here. You have basic trendline resistance, slope resistance for the for the median line formation we've been working with. And the break to the downside or the reversal, look where we're coming into support now. Right here. Let me get rid of that 618 at this point. Right here at the 2016 open, so where we opened the year, slope support, the median line structure, and last month's low day close, which comes in right around like 108.86. So either way you slice it, near-term support, okay? If you look at this on the intraday chart, even on this slope, a little bit different of a picture, okay? These purple lines are just basic trend line resistance off the highs here. You take a parallel for the high that you made back on July 4th. You can see nice pivot. You could see another low off of the July 22nd low, caught the lows earlier or late in October. And we have that median line just lower into 108.30. So at the end of the day, I'm still thinking you could possibly see another probe lower in euro, but while above this region, the immediate short side bias is at risk, meaning you could get another rip higher, maybe back into the weekly open, former trendline resistance, and then look to move off. But at the end of the day, you're coming into support. Okay, if we break this median line here, it's just a basic slope, a decent pivot in price, almost caught that low, some highs here. You can see that if you extrapolate that, again, a nice pivot here. If we break above that, the monthly open is just higher at 109.80. Sure, look for recovery towards 110.58, and that's an area of which I'd like to see a little bit more of a stringent resistance, possible re-entry on the short side. Note what's up there. That same median line. Former slope support, former highs, and once we have a little bit more assurance, okay, that this is a low, meaning we get a turn in momentum or we get a break of the Asia highs, then just tack on a quick retracement. And if you do that, okay, look where the 38.2 comes in. Same exact region. Gives you a range of 103.35 into 103.55. So that's sort of my mind set here with euro. I think you can get a near-term rebound just off the account of the monthly lows you made back in October, slope, the yearly open. You could get a little bit more of a drawdown before a rebound, but essentially I'd be looking for a rally towards 110.50 to get back on the short side here for euro dollar. It's interesting, guys, because the dollar crosses seem to be all doing their own thing. We want to take them all on their own merits. If you take a look at the dollar index, yeah, it looks like it's just plowing through the highs. I don't know what you want to do with this. Typically we like to use the dollar index as a nice gauge, but I don't want to keep chasing this. The rally and the rip off the lows here looks good. We're making it back through the 2016 open. You could see a rally back into the 2016 high day close that we made back in January, excuse me, and that's 99.53. Converges on slope resistance over the next few days. Okay, if you look at, this is the ICE dollar index. If you look at the Dow Jones FXCM dollar index, similar scenario. You can see a little bit more of a stretch higher into this pocket region. Remember, this was our near-term resistance and bearish invalidation, so I don't, want to necessarily start shorting this from here. You could still probably travel a little higher. But it gives you an indication on sort of what we're looking at with these dollar crosses. This leaves room for a euro dip a little bit deeper into the yearly open, right? It leaves room for the sterling to dip a little bit deeper into support. Dollar yen a little bit higher into resistance. So that's sort of where my mindset is. I still think we can push higher in the dollar, and then you kind of look for exhaustion upcoming, like over the next day or so, as it continues to push near the yearly highs. All right. So to go back to the euro, any questions on this before we move off? Looking for some near-term support here near 108.50, 108.70. Euro is number 2. We touched base on the dollar indices, number 3 and 4. Number 5, Aussie CAD. Or I guess before we move into Aussie CAD, let me do this for you, Conwall. Let me go over that euro yen trade. So now you have a kind of picture of where we are on euro yen, right? Let's touch real quick on dollar yen. That will be number 5, and then we'll come back. So here's what dollar yen looks like on the daily chart. Okay. Obviously, the resistance that we were talking about here at the May lows yesterday, we closed right at that level, just above it. That invalidated our short side bias. So that, guys. I'm not sure why the sound keeps phasing out here today. But that sliding parallel, what I was saying, that converges right on that same confluence. So long story short, I still think you can get a little bit higher here in dollar yen. Don't start calling a high on this and starting to get cute trying to call the turn. Here's what it looks like on the near-term chart. And even the structure that we were looking at, which held on that massive, obviously, election day drop-off and rally, even that broke as resistance, tagged it as support, and moved right off. So that bearish invalidation level did serve us well yesterday. We can go ahead and get rid of this now. We can go ahead and get rid of these. This retracement is null and void. We came in 764 retracement, but we have a new high in place, so we'll get rid of that. Okay, and basically, I want to stay constructive well above the monthly open. Keep bullish invalidation near that near that basic pivot in price, basically the high that we. Okay, rough day here for the microphone scenario here, guys. I apologize. Okay. All right, I'll have to keep an eye on that voice meter here and make sure that we're still broadcasting. No, you're not the only one, Horace. It's me. It's on my end. I apologize about that. Looks like we're having a little issue here on the network side. Okay, Horace, what did you need on dollar yen? He says, can you do over dollar yen? Not sure where the sound cut off. Let me bring this up close so I can just make sure I see it as soon as it does. Look, long story short, to recap everything, I was... Eileen says, blame it on the sunspot. Who knows? Maybe. But the long story short is the thing stays constructive above 104, 104.16 to be exact. Big confluence resistance there near 107.44 into 107.80. Sir, 107.96 is the exhaustion. Conwall, if we make it up that high, I would be looking for exhaustion there, sure. Anything northbound of 107.44 into 107.56, I'll be starting to look for signs of exhaustion in dollar yen. But again, calling these turns, you know, at every corner, we want to make sure that, you know, we're trading this objectively. You want to wait for the turn in price, wait for the pullback, retest of resistance, then get in. Because this could be pretty sudden. And also keep in mind, guys, that we don't want to fight the broader market theme. Markets are rallying across the board. Here's the SPX. Okay? You're heading right into the 2016 high day close. Not too far from where we capped out so far today, 2188. Here's the German 30, another trade that we've been following, right? Also approaching 2016 open right now. Okay? If we close above 730, that's the high day close from back here. That would give us a rally back towards 10,953, 10,983. So on broader risk assets, they are looking constructive, but everything looks like it's kind of teetering out, coming near near-term resistance. So yeah, dollar yen, let's see if we can get a push a little bit higher, and I do think you look to fade that move. Make sense? He says, sure. All right, guys. Sorry, I'm a little off today. I'm kind of having one eye on the meter here and one eye on the charts to make sure we don't lose sound again. All right, so that's dollar yen. Any questions on dollar yen before we move off? Little ripperoo here. Okay, levels unchanged on that. That was number 5. Let's do euro yen, number 6. This one's for you, Kanwal. Here's euro yen. So, the only thing I wanted to talk about euro yen is actually, it's funny that you mention it, Kanwal, because I was just looking at this with a colleague of mine here in New York, David Song. You guys might know him from Daily FX. And he was looking at this trade too, just asking my opinion. Look, the September highs come in at 116.36. Not that that's any major bearing in and of itself, but look at this basic slope. Just basic trendline support. It's been a really nice pivot. Support, support, break, resistance, resistance. Look where we capped out. So I think you can get a little bit pullback off here. Not to mention on the way up, you've been marking divergence, price action, new high, oscillator holding highs, price action, new high. Let's see where this 4-hour chart closes, but the oscillator, another high, a lower high. So I think you can get a possible pullback here. While below 117.12 is still the risk. I mean, I still think you can possibly get a tag of that. That's a nice pivot in price and also a longer dated 618 retracement. Right here. But broadly speaking, you want to look higher in euro yen, in my humble opinion. Consolidation sort of formation looks like it broke. The real test would be a comeback here into the monthly open at 115. That would be the real test of support. If 115 holds, I'd be looking for a much more aggressive assault to the upside. But near term, that's sort of the support I want to respect here on euro yen if we're moving higher. Let me clean this up for you real quick. 115 is the monthly open, the weekly open, former slope support, all converge right here. Conwall, does that make sense on euro yen? Not a trade I'm personally following right now, but it's definitely something I think we should be keeping an eye on. Could find some resistance here near term. Interesting. So if we take that slope and we connect it off the lows here from the 30th, you can see resistance, break, pivot break, support. Kind of highlights that same region. Let me get rid of that 786 for you. Yeah, we don't even need that retracement. There we go. So Kamwal, does that help? Feel free to take a snapshot. AJ, by the way, you're new to the room. Just a quick reminder, man, there's a quick camera button on the top right-hand corner of your screen. If you need to take a screenshot of any of the charts that you see presented, it'll save it for you so you can refer it back to it later throughout the trading day. Feel free. Kamwal says, yes, sir, thank you. You're more than welcome. AJ, you're more than welcome as well. All right, so that is euro yen. Tracking for some near-term resistance. Look, even if it gets into 117, I'd still be looking for some exhaustion, okay? So if you're holding longs, this is where I'd start to wrap some of that up, take a little bit off, bring your stops to break even. I'd have the rest of my limits back up at 117 or just below. Okay, that is euro yen. Number 6. Let's take a quick segue back to last night's update. Number 7, I just want to touch on Aussie CAD. I was looking at this with a big old grin on my face because we talked about this the last time we talked about it. I didn't even link the previous update because the last time we talked about this was literally, I think, in late August, early September. And we had that 100% extension up there. We were still way trading on the way up, but here we are. And the level of interest for me is 103.40, 103.43. Now that region of resistance does extend higher, okay, into this long-term trend line, which I'll show you in a moment on the live charts. But the basic premise of the trade is, look, this thing is marking some divergence. Aussie turned exceptionally hard. Dollar CAD, although it continues to travel higher, the top side looks real limited. Okay, and that would mean CAD strength would bring it down. So I do think we have the opportunity to look for some exhaustion into this region. Into this region. At the same time, guys, this is bearish invalidation. So if it breaks, this thing's going to explode. Here's what Aussie CAD looks like on the daily chart. And these are the trades that I like. They're coming into such critical areas of resistance that you know really well, or you're going to know really quick if you're wrong, right? Because you're coming up into a huge region. And if that huge region is cleared as resistance, finito. We know when we're wrong. At the same respect, we have the opportunity to play the pullback. And I think that's what I'm looking at right here. Again, the region 103.42, extend that region into 103.80. I know we capped out higher, but again, volatility and overnight, still kind of clearing out some of that election, dust cloud, let's call it. But this is the major key area of resistance. So I am on the lookout for short triggers. The initial break that you need to see, 2 levels, okay? The weekly opening range low, an objective measure that gives you 102.25. The actual stretch concerted low is 102.27. And the monthly open, which comes in at the monthly opening range low. So both those levels are objective, has nothing to do with Michael Boutros or SB or Jamie's opinion. And that's always what we want to base our analysis off. So on the intraday chart, looks pretty clean. Okay, these tops aren't going to be just made in a one spike like this. Sometimes it's going to be a rounded top. Sometimes it'll take some time. But the premise is, here's your monthly open. Here's your weekly open. Here's your monthly opening range low. Here's your weekly opening range low. At the same time, that whole range is taking shape just below key resistance. Favorite setups. So I'm looking for exhaustion. I'm looking for this thing to get tired. I'm looking for a break of the weekly, monthly lows. If we get them, you're looking for targets at 101.44, 101.20 is just a swing high. Critical support is down at the 2016 open, confluence of former trendline resistance, current channel support, and that yearly open. So might be a little early, like I noted yesterday in the piece. I'm glad I kind of gave you that prompt. It might be a bit early, but we've now made another attempt and failure to close or push through that. Watch today's close. Any close sub 103.40, in my humble opinion, still continues to suggest the risk remains for a pullback here in Aussie CAD. Questions on Aussie CAD? Number 7. Mike wants to look. Hey, Mike, can you have a peek at CAD Yen if you have time? CAD Yen. Michael, I don't even know if I have a chart on it, but let's check it out. CAD Yen. I don't, but that doesn't mean we can't take a look. Let's check it out. Okay, so the last time we looked at CAD Yen was way back here in July. Give me one sec here, Mike. Let's just get my bearings straight. Here's your monthly open. Just get a couple of monthly opens here so I can just get a better visualization. So the monthly open ranges, guys, can oftentimes be a very just strong help in helping you identify what ranges were broken, where the monthly highs and lows came in. So for me, it's sort of just my first step approach. Okay. Okay. So what I can tell you is this, Mike, and again, I'm going off the fly here. I'm just looking at this for the first time. Um, He says, thanks, Mike. I'm stalking an exhaustion soon. So yes, you're coming to the top of the range, Mike. So I can see from an intraday standpoint or a near-term trading standpoint how you're looking for some resistance. That kind of makes sense. Momentum's also heading into the 60 barrier, which it's capped the advance for the last 2 months here, right? So I'm with you on that. But price action on whole for the month, in my humble opinion, on the trade like this, actually looks constructive. And I'll tell you why. The 7640 level is not necessarily that it's a 786 retracement and that's all. Mike, I'm so sorry. Where did I lose you? Where did I lose you guys on that CAD yen spot? Um, I was basically saying that near-term price action, Mike, has me higher. Oh, damn, I lost it right at the start. Sorry about that. So this is what I want to say. This key region of support, we've been watching this cushion for months. Okay, long-dated 786 retracement. You have a 1618 extension from the decline off the highs they made in 2015. The fact that price action, what it did yesterday, is what has me looking higher. Mike, I see that you're saying you're looking at exhaustion. You're coming to the top of the range, so I understand your mentality behind looking for a pullback or looking for some near-term resistance here. You've got the lows from earlier in the year. You've got the highs from last month. Sure. Momentum's at 60. Sure. But this reaction that we got yesterday is pretty indicative of some near-term reversal play. Not only because the low caught that trend line exactly, but we closed well above the monthly open on that stretch. And this invalidates the monthly opening range highs, which was like 78.54 here. So objectively, Mike, that actually shifts my focus higher. We're at resistance, so I don't want to buy here. But certainly this kind of reversal play is suggestive that you could see a little bit more of a topside rally in CAD yen. Does that make sense, Mike? And again, I'm just going off the fly here. I haven't really been following this trade, but on initial looks, that's sort of what I'd be looking at. He says, cool, wait and keep an eye on it. Yeah, so the intraday chart, even from the start of the week, right? Here's your weekly opening range high. You spike it past support, failure, recovery, and it looks like making it back through the weekly, monthly open. If we break the objective weekly opening range high, it'd basically be a validated reversal play. This is what the weekly chart looks like. Oops. Okay, so when we look at this from a weekly standpoint, Mike, something that we always like to highlight or see, outside weekly reversal. So price action has taken out all the previous week's range, took out the previous week's low, took out the previous week's high. You know, if we close at these levels, specifically if we close above, 79.50, those previous highs, that would be a pretty clear-cut reversal play in my mind. Good question, though. CAD yen, super interesting. Okay, that is number 8. He says, thank you, sir. I see it clear now. Right on, Mike. Cheers, mate. Conwall, sir, I'm short crude, 45.22. Okay, we got dollar CAD, we got CAD yen. Yeah, we can jump into the commodities, sure. Here's what crude looks like, buddy. Short from 45.22, nice entry. Target 144, you're about 56 cents off. Target 2 at 42.16. Let me ask you this. What do you have at 42.16 there, Conwall? What are you looking at there? All right. So here's what I would say to this. You're staying bearish sub 46.22. I like your entry. As far as the near term, the only thing I don't like getting aggressive on is targets beyond this 50 line right now. You see that 50 line? So this is the near-term structure that we've been following in crude all week long. We talked about this 50 line yesterday. It's the bisector of the lower half of this median line formation that we added last week. It caught almost the low exactly last week. Here's the spike low again, catching it. I would just be cautious about getting anything aggressive below this. I still think, like I said yesterday, you want to stay, and like I just said as well, you want to stay bearish sub 46.40. But I still think you could dribble sideways here for a little bit, maybe even spike into that before moving lower. So on an intraday standpoint, yeah, I like it lower. For new positioning, you have your stops where, Conwall? I'd have a stop on that at break even at this point, because if it does rally to 46, I think you get a better opportunity. But near term, 44, I do like 44, 44.07, Conwall as your initial target. I'd still keep that in focus, 44 as a near-term possible target on the initial downside move here. Okay. Again, guys, I have to apologize about the sound issues we're having today. Jamie's not going to be using this PC, I can tell you that much, so hopefully his webinar will go a lot smoother. But just on the back of this week, I'm not surprised, so please don't forget my euro pound. No, D, here, let's take a look at euro pound. So Conwall, I know we got it chopped up on the sound here a little bit, but bearish sub 46.40, initial target 44. Watch for a break below 44. I know we broke through it twice already, but I would still be looking at is the weekly open and the 618. So watch 44 and then that median line, okay? Can you write the levels? Sure, I can type them out for you real quick. Support 44.04. I'm going to give you the next level right at the where that ML is right now, which is like 43.30. And then that 42.18 level is a good 76. Resistance 46.22/44. Okay. All right. So D, here's what euro pound looks like. I'm interested. It's interesting that. Well, let me take a step back. Here's what your euro pound looks like. It's all about the daily chart for me at first. So you're in this, like, a lot of people were already prematurely calling this a bull flag. I don't really like to stress labeling per se, the name of the formation. It's all about what near-term price action is saying. Long story short, you're at support. Okay, 87.09, 87.38. This is the same level we've been looking at literally now here, D, for 5 months. It's the 100% extension of the advance off that low, that we made back last year. Okay, boom, boom, boom. We maxed out right there back in August. We maxed out right there again back in September before the inevitable early November or early October break rather, and that's what we're checking as support right now. The monthly open for last month comes in just lower, and then you have the 618 retracement. This is a long dated retracement that dates all the way back to the highs we made in 2008. Okay, but a decent pivot in price nonetheless is basically what you're looking at right now. Bear with me one sec. I want to see what this looks like. Yeah. Okay. Here's what the intraday chart looks like. Someone must have asked about this earlier last week. Looks like that slope still looks good. D. Either way you look at it, you're coming into support. I'm surprised you got stopped out of the short side on this, D. Yeah, well, it happens. Sometimes it's just a timing issue. When that issue happens and your broader directional bias is right, but you get stopped out of the trade, and trust me, I know how frustrating it is. Oh, it was election day. Okay, all bets are off on election day. Sorry. I don't blame you. I don't blame you. It saw a topside break of the monthly open. It saw a topside break of the near-term median line structure. I don't blame you. The only thing I would have probably still wanted to keep an eye out as far as your stop was that basic channel resistance, which actually did catch it pretty nicely. But long story short, shoulda, woulda, coulda, right? Where do we go from here? Look for some near-term support. I really wouldn't be looking to fade this just yet, especially if this break back below. So here's the near-term structure we were in for months, especially if this break back below this is. There you go, D, if you want to take a snapshot of that picture right there. So near-term resistance would be right here. Okay. That's basically the 88 handle. Bearish invalidation for me would be 88.57, the swing lows, this median line structure right here, and the weekly open. A break lower below 87, you're looking for that lower parallel and more concrete support down into 86.42. D, did that review just help you? I know I lost the audio again, but I just kind of ran through the levels. $87.09, the lower parallel. Currently near 86.70 and 86.42. I just sent you the levels there, D, for everyone in the room actually. So again, if you missed that, yeah, you're more than welcome. It's my apologies. We don't usually ever have issues with GoTo. I will have this addressed for you, no worries. Okay, real quick, because we are running into the close of the session here, I do want to just run right through some other pairs. If I missed any of your questions, guys, or if you had a specific pair you wanted to follow that I didn't cover, now's the time. Feel free to throw it on the message board. But what I wanted to say was for pound dollar, here's what sterling looks like. No change to any levels whatsoever. I find it very impressive that pound is still holding very, very well, given the consideration of the dollar strength that we've seen across the board. And that's why when I was looking at the dollar index with you guys earlier, I just wanted to highlight that, it's not a blanket story. They're really just, every trade take on its own merits right now. Don't stress, a broad blanket bias on the dollar because it's just not going to pay you. At the end of the day, still liking long side of sterling while above that 123.19 level that we talked about early in the week. I'm going to go ahead and bring up near-term bullish invalidation to this region, just a little bit higher, not a big difference, but that's 123.38 to 123.50. Not negating the 50% retracement, but just to take into account where we are in slope, that kind of converges now on the weekly opening range lows, slope off the highs, slope off the lows, the 100% extension, and swing high. So that whole region still kind of brings up our near-term bearish or bullish invalidation from 23.20 up into like 23.50, basically 23.30. So top side objectives, look at the median line, the weekly open, that's 25.10 into the 25 handle. Subsequent objectives aren't changed, so that's 125.57. 126. Okay, you want to be buying pullbacks here while above 23.40, 23.50. All right. Okay. All right. Conwell says, thank you, sir, for your crude levels. You wrote also write the levels for silver. Do you see a pullback? So silver, here's what silver looks like. It's in consolidation. As I said yesterday, the levels remain completely unchanged on this. You're looking for near-term support, still down at 1826 into 1835. There's a 4-hour chart. Yeah, I mean, you could see, let me take a step back. The whole thing still remains pretty constructive, but you're seeing some pretty rigid resistance right against that 100-day moving average on the breakout here, right? So look at the closes. They still haven't been able to clear this formation. I still think you're at risk for a pullback, yes. Broader trade still remains constructive while above 1785. This confluence support we talked about yesterday. Conwell, does that make sense there on silver? Now, if we talk about gold and, well, I guess gold is the same exact picture. Here's what gold looks like on the daily chart. You're right back at support despite a rally as high as, oh God, 1336. We're right back at 1276. The key support that we opened the week, this was the level that we had highlighted going into the election as the level of support, of which if we do see a break, you're likely to see a much more substantial drop in gold. The fact that we made a complete round trip into those highs, came down again, puts the pressure on this level again. Look, I have support at 1273 on a closed basis, or 1272 on a closed basis. If we get below that, I think gold possibly falls apart. That being said, you're at support. You're at support. Why is copper ripping? Fundamentally, I know, but should be something. So Eileen, copper, what do you mean by fundamentally, it's seen as an input for production. So it's often a gauge, or often when you see, often if you see real strong surges in market rallies, specifically in risk-on measures, copper will typically be like one of the go-to beneficiaries, just because, like I said, it is an input in a lot of different production. So whether this is associated with the broader risk-on rally, I don't know. At the end of the day, this was leading. So despite the turmoil that you saw in some of the other risk assets, copper's been ripping. It's been ripping face, and I have to give it credit to Jamie 100%. He's been tracking this since the origin of the rip, right down here. So look, we have some measured moves that we're looking for. The consolidation measured move takes you into 271. A basic 1618 extension off the base low that we made for the year takes you into 264. These are levels I'm looking at for the top side. You stay constructive while above 244 here or so. Basically, I don't want to keep it quite as crude as just that low, but let's work with something like this. It's sort of where I want to stay constructive while above. Actually, if we take a retracement off the highs here, yeah, that was a big break. The break above 245, 243 was huge. Where does this 38.2 come in? Okay, I don't want to cloud up the chart, so I'm going to keep this pretty clean for now and just highlight this low. So they're the broader picture of what I'd be looking for as far as, as far as copper is concerned. Pretty major breakout here. Whoops. Okay, look at that support. A little messy here, but nice pivot, resistance also converges. So the slope looks pretty dead on. This is all derived from the initial basic trendline support off the lows for the year. That's it. All of these median lines. So from a new trading standpoint, guys, if you're looking to take on new positioning, don't touch copper right here. You'd need to either see a more concerted pullback into this support region, or maybe even at least the highs here. If you're holding long exposure, I think as long as you stay above 243, 244, you'd be looking for that stretch still to 260, 264, and 271. Might be a little bit more of a harder stretch there, but that's the actual measured objective move of the triangle break, is up here. All right. Sorry for Conwell, no need to apologize, my friend. I said I know because you're a tech guy. Oh, Eileen, yeah, no worries. All questions are fair bounds here. I want to encourage you guys at any time. So we are over on time, but I do want to leave the room open just for a couple more seconds here because of the audio issues that we did have. Anyone who has any questions or specific trade ideas, again, feel free to throw them on. So that's copper. I do want to just touch base real quick and show you a quick pound yen chart. I was looking at this earlier today with great interest. I think it's coming in some near-term resistance, 133.32, 133.20 being that level of resistance that I'm currently looking at. You're looking at a couple of different things. First of all, it's going to be the actual concerted low day close. Oh, I'm lying. It's the low for the Brexit sell-off. So your June 24th sell-off, that was the actual swing low. We're testing it as resistance. You have the 100-day moving average and basic trendline resistance there today. The close is going to be paramount. If we close above 133.20, the actual stretch low is 133.21. But if we close above that, specifically on a more breakout type of push, the possibilities are for a much more concerted rally here in pound yen. The risk heading into the U.S. trade session immediately is for exhaustion right here. Look at the near-term chart. Aside from that swing low from the Brexit, you also have an exact 100% extension from the advance off the lows. You have an exact 1618 extension just off of a near-term play. So you have the 100% off the highs, the 1618 off the lows, and they all converge on that basic trendline resistance. So for me, look for resistance basically in this pocket region right here that we're testing right now. If we close above 133.20, 133.30, likely to see a lot more upside on this play. But near term, the immediate advance is at risk while below this region. So I don't have any positions on this just yet. As a disclaimer, again, the markets are coming online. We're starting to see some volatility, so maybe you get a reversal off this. I do like I said, if we close and hold below 33.30, I like a near-term pullback play. You'd be looking for a move first into the July low day close. Basically, if we max out and this ends up being a high, tack on a quick retracement. Let me clean these levels up a little bit. Okay, I'm going to get rid of the July low day close. And that's 1618. All right. Key near-term support, 130.15. Opening range highs for the week. Swing lows, former slope resistance, former trendline support. So key support into 130.15, the 130 handle. A breakout play to the upside. Wow, you're at the 618 too. That's huge. Yeah, it's even more conviction, guys, that we could see a near-term pullback off this region. A topside break to the upside, I'd be looking for 135.50, and the 88.6 will take you into 137.23. That's actually a nice pivot too. All right, just a quick crash course there on pound yen, guys. I hope that offers some clarity there. Okay, so we'll wrap things up right here. Oh, I got euro pound for you, D, right? Yeah, we went over that. Okay, great. Adam, thank you for that. You have an awesome weekend as well. Guys, we're going to wrap things up. A quick reminder, Jamie will be online with no audio interruptions at noon. So just a few hours. I encourage everyone to take a peek in there. Till then, best of luck trading. Have a great weekend, guys, and I'll see you again next week. Remember, Monday on Daily FX for the public webinar, and then Tuesday, Wednesday, and Thursday right back here on SB. Best of luck trading, guys. Cheers.